Well, in our view, it is sustainable, but you're right. I think inflation is quite central to that debate. I think the key here really is just how quickly we return to a monthly pace of price increases in the region of 0.2% month on month. Because if you look at sort of the growth side by itself, it's been resilient, but there are signs of some softness in the labor market. So if inflation is almost cooperative, just keeping real rates where they are argues for at least a couple of rate cuts this year. We think, inflation is likely to drive the timing of that. We do believe the Fed's likely to cut twice this year, but we just believe inflation may not allow them to do that in a hurry. So perhaps deeper in the second half of this year. But for equity markets, perhaps, look, markets don't go up in a straight line, but we do think the broader environment is still very much supportive.
Okay, so still looking supportive. If we saw data confirming this week that inflation is continuing to cool, what would that mean for US equities in particular? Could we see a new high?
Well, yes. At the end of the day, we're coming off of a very supportive earnings season. More than that, we've seen sort of bond yields, reverse once again from trying to challenge recent highs. So those are two factors that are very, very supportive. And more interesting is that when you look at the composition and the breakup of earnings in the US, we're gradually moving from a world where it's dominated by the magnificent 6 or 7 to a world where by year end, consensus is expecting the rest of the market to actually start leading earnings. So short of outside shocks, the path of least resistance seems to be to the upside. So that's really how we'd be positioned. But I think the key is inflation may mean that ride is a little bit bumpy. It's rarely as smooth as we'd like it to be. But we do think we'll get over the worst of inflation. And as we get to mid-year and perhaps deeper into the second half, markets will have more confidence that the environment's in place for the Fed to cut. That's really what we're looking for this year from the equity market perspective, even as we keep sort of the long-term bets in place on the bond market side as well.